Now, speaking from experience, because I would definitely fall into this bucket for myself, a lot of dividend investors find themselves contemplating whether or not they should invest into something that offers a bit more growth potential and higher dividend growth historically, like SCHD, the Schwab US Dividend Equity ETF, or if a dividend investor is better off investing into something higher yield that's going to offer them a lot more cash flow and income from day one, like JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. And although there's not necessarily a right or wrong answer on whether or not you should buy either one of these ETFs and which ETF might be better for you specifically, and this is just because every investor out there has different goals, has different objectives, but in today's video I'm going to help you guys figure out which ETF would potentially be a better option for your portfolio in the talks of JEPQ versus SCHD. We're also later on going to go through a situation with a $10,000 initial investment into both these ETFs and again see which ETF could potentially be better. Now again, if you're anything like myself that's constantly thinking to yourself, maybe instead of buying SCHD, I should buy much more JEPQ, or of course vice versa, because I've thought about this both. I own both ETFs long term. Then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, before we go through the deciding factors and all the performance and everything else when it comes to both of these super high quality ETFs, both these ETFs are extremely popular in the dividend income focused communities, but both these ETFs are very, very different. You see, SCHD basically buys into 100 different stocks, doesn't utilize any sort of option trading strategy, and just holds onto the stocks, switches out some names year after year, and does it all very, very efficiently. Now, JEPQ, on the other hand, invests in the Nasdaq 100, which offers a lot of upside potential, but because this ETF utilizes a cover call overlay, or ELN, this ETF isn't going to have necessarily as much upside, but is going to offer a ton of income from day one. Now, how much income you're wondering? JEPQ probably is going to pay you around 3 or 4 times more income per year compared to that of SCHD. But keep in mind, SCHD does have a lot more growth potential, at least theoretically speaking, because there's not a cover call overlay. And on top of that, historically, SCHD has paid a ton more in dividends year after year after year. Now, this might seem a little bit far-fetched, but hang in there with me. I have a good way to explain this comparing SCHD to JEPQ. Now, if we were to look at the lottery, for example, again, stay with me, and look at a big payout amount as far as a lump sum or an annuity, which basically means you get paid consistently over the years. Now, both of these options are potentially good options, again, depending on what you're looking for and again, what your needs and wants are. And even though maybe one option does mathematically make sense in the long run, maybe again, the shortcut option, if you will, is a better option for you personally. Now, the way that I would look at the lump sum version is JEPQ. You're getting a lot more income from day one. Maybe this means though you might not get as much income over the next several 40 or so years. Now with SCHD, you're not going to get a massive amount of income from day one because the yield is much smaller than that of JEPQ, like I said, around 3 or 4 times smaller potentially. But along with that, over a longer time frame, you're going to outperform, probably at least in my opinion, the total return that you're going to receive from JEPQ. Now again, either one of these options aren't necessarily bad options, and that's why for me personally, I do own a ton of SCHD and I also own a ton of JEPQ because I do think that both the ETFs have a place for a long-term portfolio. So at least for you personally, when deciding on whether you should be buying into SCHD versus JEPQ, I think you have to ask yourself a few simple questions, but think long and hard about the answers. You want to ask yourself, do you want exposure to dividend paying stocks, around 100 of them that have consistently paid dividends year after year and also grown their dividends over time, and want exposure to an ETF that historically has offered massive dividend growth and has done so very tax efficiently, and on top of that has done so with a very low expense ratio. Not to mention, if you look at SCHD's chart over the max time frame, the ETF has basically been trading up and to the right significantly over the last 13 or so years, where JEPQ, for example, has not necessarily grown that much in the last several years, but keep in mind JEPQ is much more income focused, so that's not necessarily the main objective of the ETF to begin with. So with SCHD, you're probably going to get a lot more dividend growth, a lot more growth as far as ETF price, and along with it, you're going to get a cheap expense ratio, a diversified basket of holdings, and a tax efficient strategy. But with JEPQ, you are going to be getting more of a lump sum as far as a much higher yield from day one, which is going to generate a lot more cash flow for your portfolio, but it's going to cost you a little bit more as far as as expenses, and also taxes might not be as efficient. Not to mention also JEPQ probably isn't going to offer as much of a total return over the next say 10, 20, 30 years, at least in my opinion. I could be completely wrong. And again, to be completely transparent, I own a ton of both these. So although there's not necessarily a right or wrong answer when it comes to whether or not you should buy into JEPQ and or SCHD, I do think that there is a specific right answer for any individual investor. Now me, for example, I own a lot more SCHD than I do of JEPQ. And this is because at 32 years old, I want to buy into dividend growth ETFs that are going to pay me more and more in dividends over the years, which although we can't know for sure if or if not this is going to happen, SCHD has paid investors, at least historically, more and more income basically year after year. Now along with that, like I said, I do own a ton of JEPQ also because I do want to have some exposure to some more cash flow, even though I'm relatively young. And this is because as of right now, I'm building out a long-term dividend growth portfolio that's hopefully going to cover all my bills and then some later on in the future. And although we don't really have all that much data to go off of because JEPQ has only been trading for 2.61 years, a $10,000 investment invested into both SCHD and JEPQ over the 2.61 year time frame has resulted in JEPQ offering a much higher average annual total return just over this one specific time frame. Now again, if you zoom all the way out, SCHD has returned on average around 12 or 13% year after year after year. So it's really hard to compare the two ETFs performance because they just haven't been trading the same length of time. And of course, SCHD has lived through multiple different market cycles, different crashes, etc. So again, if you have $10,000 and you're looking to invest in either SCHD ETF or of course JEPQ, you could of course invest it all into JEPQ, all of it into SCHD, or you could go right down the middle and split it half and half. But I think the most important takeaway that I want you guys to have for this video is to figure out what your main objective is, and if or if not you're looking for more of a lump sum, much more cash flow from day one to maybe help you pay your bills, maybe to help you fund your portfolio as far as cash balance goes, or if you're looking to be the slow and steady route that might equal a lot more total return over the next say 10, 20, 30, 100 plus years. Or of course you could look at diversifying your long-term portfolio and buying a little bit of both, which I would bet money that a lot of you guys already do in your portfolios. So now that we talked about both SCHD, JEPQ, and I tried to give you guys a very basic yet in-depth idea on how you can figure out which ETF is potentially better for you, especially for 2025 and beyond. I lastly, most importantly, want to hear from you guys down below. You already know what I'm going to ask. If for whatever reason you could only buy into JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, or for whatever reason you could only buy into SCHD, the Schwab US Dividend Equity ETF, which of these two ETFs would you personally buy into? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.